Welcome to the STARS program, seniors taking active roles in society. And now, here's your host, ANITA FINLEY.
You probably never heard of a forward mortgage. It was just a mortgage. And then up comes something called a reverse mortgage. So now the way that they share, a way a mortgage consultant will talk to you and say, I handle forward mortgages, I handle reverse mortgages. And I'm going to ask the expert why that even is true. His name is RUSSEL HELFMAN, and he is owner of the Reverse Mortgage Consultant. So actually, isn't that true that wasn't something that someone said? A forward mortgage is just a mortgage.
Yes. The term forward mortgage is sort of like was backed into once the reverse mortgage came out. And when you talked about it, they said, well, what's a regular mortgage?
Right.
Oh, that's a forward mortgage where you make payments and you slowly pay down the lien on the property. The reverse mortgage is similar in many ways that you keep ownership of the property. You're still on title, but it's a much more flexible product, and it's only available for seniors.
Yeah, that's very important. So anybody who's not a senior, it's not that we don't want you to listen, but you can't do it yourself. But I've had a lot of people, Russell, knowing how great these mortgages are, who aren't 60, even 60. Why can't I get a reverse mortgage? I could sure use that. Well, let's just get into it. Why don't you first start off by exactly what is a reverse mortgage?
Well, I've been doing it for about 7 years, and I do it because I enjoy working with seniors and helping them to understand what can be a little bit of a confusing idea. It's best suited, in my mind, for seniors that want to stay in their house for a long time. They want to age in place with peace of mind. And the thing, though, is they hear a lot of stuff. There's a lot of TV commercials that say a lot of different things. And those myths out there, just talking to my customers and going through and helping them to understand these misconceptions, that's where I spend a lot of my time. The one simple way that I like to explain a reverse mortgage is it's a loan from the government for seniors 62 and older where they allow you to borrow against your property, which is normally a senior's largest investment. And it's called a home equity conversion mortgage, or HECM, because it allows you to convert a portion of the equity in your home into cash.
Now, let me stop you because people have said, when we've been talking about reverse mortgages before, well, why do you want to do that? You just go to a bank and get a loan. No, if you don't have a job and you're retired and you just have your house, no, you're not going to get a loan. And see, they don't understand that it's the access to. I've always thought about it this way. It's the access to the money. It's your money. You put it in your house. You have a choice. You want the money? Sell your house. You don't want to sell your house? What are you going to do? You got to get money. Well, there's no money that you buried under your mattress. Aha! There's money in that account, though. And the government, it's one of the things, I always equated it to Social Security, Medicare. It's something the government was smart enough to do for the older adults.
And that's when they say is back when it was originated in 1990, and Jack Kemp was a big proponent, that the government realized that seniors weren't going to have enough with just their Social Security, and pensions were becoming a thing of the past. And they came up with this idea, again, because it's the biggest investment a senior has, as a way to help supplement Social Security and any other income. So when unexpected expenses happen and health care increases and prescription drugs, it's a way to cover those expenses and still have peace of mind and still feel that you can stay in your home.
Yes, and there are a lot of features to this that you need to have someone like a Russell HELFMAN who really is an expert. You don't want to just sit down with someone who's a mortgage broker. You need a specialist in this because there's a lot of ins and outs, things that maybe aren't right for you because, am I not right? But when you first talk to someone, they have to qualify. Their house has to qualify.
Yes. The program has changed a bit, especially last May. They added a financial assessment. In the past, it really just depended on your age and the value of your home, and that determined the amount of funds that you'd get. Now it's a little bit harder. The financial assessment, determines your willingness and capacity to meet your bills. And by willingness, they mean, do you pay your bills on time? And capacity is they do a minimal income check. A credit report is run, but credit score isn't important. They're just looking to see that you've paid your bills on time.
And the one thing, Russell, too, that did come out, which got everyone scared and it was just so dumb, is when there were a lot of people who didn't pay their insurance on their house. And normally we all pay our insurance on our house, but they didn't. And all of a sudden there was a big thing about that. Had nothing to do with a reverse mortgage.
And it was making some banks look bad that were having to do things they didn't want to do to seniors. So the government was, in a sense, smart. What they did is they figured out, let's add this assessment. And the assessment doesn't necessarily deny eligibility. If you don't pass the assessment, what it requires is that certain amount of the available funds are put in an escrow account to pay your property taxes and homeowners. So you're not losing the money. You don't have to worry about making those payments, so it frees up more cash. So it really is a win-win.
Well, a lot of us who have mortgages on our homes do have that money in escrow because they take it out every month, our taxes and our insurance. I am such a big proponent, and as I told Russell when he first came to the radio studio, that I had a father who he was a lawyer, and he had enough money, and he was getting full-time help in his home for over 3.5 years, day and night. But I was one of the trustees, and I could see, because he was then in his late 80s, if he lived to be in his late 90s, he was going to run out of money. And so I said, we have to start thinking about a reverse mortgage. Now, I also told Russell that at the time, this was a great idea that the congressman came up with, but it had to be refined. And thank goodness we're now in a time where it's easy to get one if you meet the requirements. They've got it all figured out where it wasn't before.
It is. And to take a step back, and just to quickly point out the differences between this forward mortgage, which was the other option that one would think of, with the reverse, you're not required to make a mortgage payment. And that's the key. You can if you want to. So some people that are young, they're in their early 60s, they're still working, they'll get a reverse mortgage and continue to make the payments, but they've got this huge line of credit available, and any payments only increases the line of credit, so it's this gigantic safety blanket. And, so the funds that you get from the reverse can be this very flexible line of credit, and that's what most of my clients do. But you could also set up a term amount of payments, like for 20 years, I want to get this much, or tenured payments that say you will get this payment every month for as long as you live. So it's very flexible that way. But I think the financial planners and after talking with clients for a while, the line of credit does offer the most benefit. Because as the money sits in the line of credit, there's no interest charged on it, but it does grow. And that's key.
That's excellent. I don't think that was part of it years ago, the way you're saying it, because that way, if they should have that emergency, they can get into it. But if they never have it, what's the difference? Because when you have the emergency, you may be looking at 30, 60, 90 days to be able to alleviate it. So having the line of credit, it's there. That's beautiful. I'm glad. So when you sell people this policy, is that what they tend to want to do?
Well, yeah. I mean, you get... For many years, the program, most of my clients, it was a need-based program where they didn't have enough money to meet their bills, and this provided some funds for them to do that and stay in their home. And the big plus over like a home equity line of credit, if you take that and the housing market goes down and the value of your home goes down, the bank has every right to pull the credit line back. Because this is an insured government loan, the line of credit is guaranteed. So it can never be, and it grows. So that really was one of the biggest selling points when we're selling against someone saying, no, I'll just get another forward mortgage, forgetting about the fact that there's going to be much more strict income requirements and so forth. The fact that line of credit is guaranteed is very important.
Well, you should be having fun as an insurance consultant. A lot of times people have talked to me, I don't want to sell insurance, blah, blah, blah. But this, you can see the immediate benefit. You see, a lot of people sell life insurance. Well, you don't see the benefit until someone dies, and then they can't say thank you, right? But here, when you sell a policy, when you do a reverse mortgage, you see the benefit right away. Somebody could actually, and if they want to go on a cruise, or they don't want to just wait for an emergency, they've been living in their home. Let's say they're 70, 80 years old, and they never thought that they had the money there. They figured they had to sell it or not. Now you say to them, look, if you want to get cash, you have $200,000 sitting here, and they're afraid to take a $5,000 cruise because where am I going to get the money from? Right? Or if they're still making payments on their mortgage. Now all of a sudden they're like, they just hit the jackpot.
I know. And it sometimes takes a lot of explaining. And that's the important thing, is that I sometimes feel that I'm answering the same question multiple times, but the light bulb's only turning on slowly. And I've had people that have saved and been so frugal their whole life, they don't want to do this. But then when they understand that, wait a second, I could help my grandchildren pay for college now when I'm still alive and enjoy it and know that I'm helping out my child at the same time. It's a big plus, and the thing is the reason why financial planners are coming on board is because they're seeing the flexibility that the line of credit offers, that it allows other investments to not be tapped so they can grow. And the truth of the matter is, just from what I've heard, most children don't want their parents' house. It's going to be sold and divvied up. But the investments that they have, those can more easily be given to the heirs. So, so in a way, the reverse mortgage cash flow enables the delay of touching any other assets. And another big important one, which is hard to explain, is that it enables you to theoretically delay taking your Social Security payments. And that is so key.
Fantastic.
Because if you take your Social Security at full, 66, but if you're able to wait till you're 70, the amount of increase in the payment is 32% more. And it's not only the increase in the beginning, but as the years go by, 10, 12 years, you would have been getting double what you would have gotten, say, if you took it out at 62. And that's what I'm finding some financial planners are using it to delay Social Security.
I had never heard that before, and I'm so glad you mentioned it, because as much as I've been in this business working with the older adults in business, my husband and I took our Social Security when we were 65, which is so dumb, because at the time we didn't really need to do it. And when I hear about those figures, I want to kill myself. So that's another really big bonus. So, because something that, I don't know if you said this, but let's say they take the money out, they put the money back in.
Absolutely.
Right?
No prepayment penalty.
So see, they could hit 70, then go ahead and pay back all the money. And even if there were some expenses they had to do, it still wouldn't equate to what they just gained.
Yes, I have a number of borrowers that will only make the interest payment, so that way the balance of the loan remains steady. Everybody has their different ways of thinking about it. But now, to answer your question as far as the eligibility,
yes,
essentially to be eligible, there needs to be enough equity in the home built up to pay off the existing mortgage. And the amount of funds you get are based off the age of the youngest borrower and the value of the home. And just some quick numbers, if you do the reverse at 62, you're getting about 53% of the home's value in equity, versus if you wait 10 years, it's up to 59, and as high as 75% at 90. That's what determines if the property is eligible. Generally, and this is a big question I get asked a lot, will this impact Social Security and Medicare? And the answer is, for federal programs like Social Security and Medicare, there is no impact. But for a state program like Medicaid, the way the borrower takes the funds could impact their eligibility. And then we recommend they speak to a financial consultant.
Or to an elder law attorney or someone like that.
Exactly.
That's excellent. So let me just tell you again, my guest is a real expert on this, Russell Helfman, HELFMAN. His toll-free number is 855-434-2349. So get your pencils out. Remember, this is Pencil Talk Radio. Get your pencils out. Write down the number. It's 855-434-2349. And if you can write quickly, you can put his website down, which is thereversemortgageconsultant.com. thereversemortgageconsultant.com. And I just hope that people, it's a free consultation. So if you're not sure, if you don't understand, just give him a call and he can do this over the phone. You probably are experienced enough to talk to someone over the phone, and within minutes,
Absolutely.
you know if they're eligible.
But what I personally like to do, because if people are smart, they're shopping it around, I like to run all the numbers and see whether I'm meeting with someone in person or over the phone, get in their hands a full analysis with all the numbers. So that way, when I'm going over with them, they see exactly how it impacts them, exactly what the cost would be. And I think that helps alleviate a lot of the misunderstanding because, you know, it can be a little bit overwhelming. It's a very important decision.
You're a real pro.
Well, you know,
because you're right.
I like it when the bell goes off over the light bulb goes off, and they're like, I get it now. And they'll thank me for taking the time to answering it 3 or 4 questions. And then I say, then I know I'm doing my job. Because if you don't know all the answers, you're probably not going to be interested in something like this. So,
no, you're absolutely right. And something else you were saying before about the older adults, at first, they were talking, when I first was talking about reverse mortgages, they would say, well, the children don't want the parents to do this because then they're not going to get as much out of the house when it finally gets sold or taken back or however it's handled. But that's not really true now because the young adults know that they are going to be responsible for taking their own money to help their parents. And why would you want to do that when it's all sitting there in the house waiting?
What I found, and I also think it's important to speak to the family. You know, nothing I like best when I have someone say, oh, I'm sending it to my son to review. Have your son call me. Nothing makes, because now I know if the son understands, they have the information they need to make a decision. But what I found is that the children, they want their parents to use the money so that they have they can remove the financial stress from their life and enjoy their retirement. But it doesn't mean there will be no money because housing markets, they're going up and there won't be as much money as if there was no reverse mortgage. But you also know that your parents were happy and secure. They had a safety blanket should anything unexpected happen. But just like a traditional mortgage, once the loan becomes due, it's paid off and any remaining equity is given to the heirs. So it's very much like a traditional mortgage in that sense.
Yeah. I love the way that you talked about the having a line of credit available because you never know when one of the kids may need it. And then the parent can say, here, take this money. Your child needs this medical service, and they wouldn't have had it otherwise.
And it's available without the tremendous stress of what do we liquidate, you know, and sometimes, oh, well, those stocks were handed down by Uncle Bob. I never wanted to cash those in. Yeah, well, you may want to hand those down even further, but nobody's really going to probably, if you have 4 kids, they'll probably sell the house and split it. So, but the availability of the funds for an emergency really can reduce the financial stress.
So is this the only thing that you sell? Is this it for you?
Yeah. The bank I work for, I reverse home loans. That is all they do is reverse mortgages. Our president is on, you know, a number of these different committees, and he wanted this all to be about the right thing. You know, we have to treat both the lenders and the borrowers with the utmost respect, answer all of their questions, And I will tell you, I have turned away borrowers where they said, okay, let's do this. And I kept asking them, what was your goal again? And inside, I really believed they didn't need this loan. And I didn't want to come out and say, don't do it. But I made it to the point where you need to speak to your family more, because I believe in karma. And you always want to do the right thing. And if someone's doing it for the wrong reason, I'd rather them not do it and continue their education and decide what is the best answer.
Well, I have to tell you a story now that you mentioned that. I do remember a story that somebody took the money because the child came to live with them, an adult. And the adult had a gambling problem. And the person got the money from his home, and the son used the money. And so that was very sad. And it's kind of what you're saying in a way, that if you knew that that was going to happen, you probably would be very, very cautious about allowing that older person to do that, right?
Yes.
Yeah, I heard that. And I have heard some stories. I mean, listen, that happens with people without even mortgages. They go in and they take all the money that the older adult has, and it's just really stealing.
I've done a lot of business where seniors are in a reverse mortgage, but they've done it so long ago that the parameters were different, and because of a need, they can refinance and get some additional funds. But the statements that they get can be so confusing. So I had this woman call me, I have $20,000 of credit card debt. I just got to pay it off. It's at 19%. I got to pay it off. She was so focused on that. I took her through her statement. The term was net principal limit. It certainly didn't say available line of credit. Turned out she had over $25,000 available to her in a line of credit. She just didn't realize it. So I easily could have refinanced her loan and gotten her substantially more, but that's not what she needed.
No.
She was worried about that $20,000 in credit card.
She didn't even...
And the thank yous that woman gave me, I felt really good that I knew I did the right thing, because it would have been so easy. Because she
like she owed the money and she was going to take the money.
And she didn't realize, so that's the thing. That's why I like to get the analysis in front of them, because there's a lot of numbers. But when you can look at it together, even if you're over the phone, the numbers make so much more sense when both people can look at the exact same information. So,
and something else that you said, Russell, which I totally agree, because at the beginning, I think the elder law attorneys, the financial consultants and accountants and people like that, they were just very negative about this. They said, no, why do you want to do that to your mortgage? And they started looking at different, they were sitting in their lush offices. Here's an older adult, hasn't enough money to really have a nice life. They're worried. And they were telling him, no, you don't want to do that. I used to get very upset. I mean, you really were, it's very good that you came here, because I have all this passion about it. I really know the advantages. And they were wrong. And now they see it. Now they realize it's fine.
It's taken time, and a lot of articles have been written, a lot of newspaper articles. Really, it's taken time for them to come around to see that in some cases it's a really good option. And then the piece of advice that I give, other than really trying to educate yourself, is shop around, because there are upfront costs for this loan. And there have been times I've done these loans and had the bank be able to pay all of the upfront costs. So
why is that?
Because if someone's taking out a very large loan, they owe $250,000. That's a large loan. So I'm being honest, I make enough. I feel I'd rather make less, pay their closing costs, because I'm going to get a referral out of them when they say, this gentleman did this for me and it didn't cost me anything.
Good for you. Oh, that's music to my ears.
You've got to shop around, because someone will say, oh, I'm giving you the best interest, but what about all the costs? And, the cost can be substantial, and especially in Florida, because there are two different types of mortgage taxes. So Florida tends to have a little bit higher closing costs than some of the other states. But if you can get the bank to give a lender credit to pay for some of that, it just makes it that much more attractive.
That's lovely that you do that. So Because you can sell this here in Florida, can you sell this anywhere in the country?
Yep. I work, I Reverse Home Loans is a subsidiary of Bay Bank Federal Savings Bank. So it's a federally licensed bank. So we can do them. And that's where I get a substantial amount of my business is direct mail in California, Texas.
Yeah, I was going to say that's great because, as you said, they're going to refer their friends and oops, you live in Massachusetts, we can't help you, right?
Yep.
But you can. So you can do this anywhere.
Yep.
And the whole principle remains the same because it's a federally.
Yes.
It's a federal.
Many years ago, there were county lending limits where one county you could only go up to 150,000, and then state over could have been 275. Now everything's federal lending limits.
And what is the
625,500?
Wait a minute, 600? No kidding.
It's much higher than it used to be.
And why was it? Because people's homes were now much more expensive, and that's what happened.
They determined that people, even with that income and level, still could benefit from this program, and that's why there are a lot of people that did it and took it out when the limit was 300,000. And if they contact me, I say, listen, if I do this for you, you paid closing costs the first time. Most likely the loan will be large enough. You won't have to the second time. So it makes it that much more attractive. Okay, I can get more out. I've got a better product, and it didn't cost me an arm and a leg this time, when in the past they were charging on the front end and the back end. And I normally want to make the deal a winning deal for the borrower. So the lower the cost can be, the happier the family is.
Well, you're certainly doing a good job. I mean, you're an expert, and you have that the sympathetic side to you, or empathetic. I'm very happy. So discover the retirement planning tool that can change your life. Learn the facts and understand the misconceptions. Reverse Mortgage can help you in many ways. Please be sure to call Russell Helfman, and his toll-free number is 855-434-2349. I can't thank you how much. I'm so happy you came here, Russell. And
thank you for having me.
Yeah, it's really wonderful.
It's been a pleasure speaking with you.
Yeah, well, hopefully we'll do more. Thank you.
Very good. Thank you.